Hi, everybody. I'm Chris Duffus. I'm founder and CEO of PhoneBank. And what we've created is a type of bridge to Web3. And what that means is we enable people to do something as simple as top up their phone and use that value to access stablecoins. And the benefit of that simply is it enables a form of cross-border payment, remittance, commerce that without the use of this type of technology may not be possible or would be very costly otherwise. And as we think about sort of the opportunity on the continent, it's probably the highest and best use case for this new type of technology, for this composable software and networks that people can create these highly configured solutions tailored for whatever their specific needs and applications are. Finance is just part of it. And you have one of the largest, youngest populations that's tech savvy, that's media savvy, that's world savvy, that has historically been blocked from the global digital economy. And we see this humongous opportunity in connecting smart young people like ourselves here to the world.
Hi, everyone. My name is Chia Achebe, and I'm the founder and managing partner of Achebe Capital. And at Achebe Capital, we're on a mission to bridge diaspora communities, starting with Africa. And so we invest at the seed stage across Africa and the African diaspora, and across 4 themes. And we say themes because it's very intersectional, unlike a vertical. I think a lot of these things are interlinked, right? And so we invest across 4 themes: care, short for healthcare, climate action, commerce, and culture. And the sub-themes within commerce are fintech, supply chain logistics, and manufacturing. The sub-themes within culture are media, music, fashion, beauty, wellness, all the things that in VC we tend to kind of bundle into consumer, right? Or we probably don't invest in because it's hard to quantify. That's a lot. We believe that that's where a lot of the alpha is. Culture creates alpha. And that's something that we have across, well, we have all of these themes in spades across the continent. And so that's one thing that we really want to be able to show in our investments through Achebe Capital. In terms of why I believe that the continent is an exciting place to invest in, it always has been, and it's even more so now, right? It's always been a good time to invest on the continent, but I think that right now it's just such a huge window of opportunity, not only for global investors, but everyone in this room, right? We can all invest in one way, shape, or form, right? Instead of like remittances, I really want to be like, I want us to really change the conversation to just investing, and having that be a form of how you really not only give back, but also generate a return and give back sustainably and build sustainably. But we could talk more about it. There are multiple reasons, but I would say my top 5 are the rapid urbanization, right, coupled with the growth in the consumer market and spending, the change in demographics, the mobile phone penetration, and just endless opportunity.
Good afternoon, everyone. Andy Dervishi with International Finance Corporation. I'm a former entrepreneur, semi-successful, semi-failed, I don't know, however you want to see it, that turned into a venture capitalist and has been a venture capitalist for the last 30 years. I've built more than 90 companies around the world, mostly in tough markets. I avoid the crowds. I hate crowds. So whenever there's too many investors coming one way, I go the other. So that's why I like Africa, and I like Africa now a lot.
I love that. And I actually want to stick with you, Andrew, because IFC is one of the largest investors on the continent, particularly when we look at early stage fintech. Can you talk to us a little bit about some of the success stories that you've had, and what lessons can we learn from those success stories to drive more private sector capital and investment on the continent?
As an entrepreneur, every time people talk about a problem, you think the other side of the fence, and that problem is an opportunity, right? So in a way, all Africa, everywhere I go around, it has yet to catch up with many of the opportunities that we got used to in this part of the world, in the US, in Europe, even in Albania, where I grew up. Which means it's very easy to predict the future of these markets, right? So, but it takes courage, right? So it's still cold water there, even though you know there is fish. So the question then is, how do you train yourself to have the stomach to jump? How do you train yourself for your organization to have the faith in you to give you the capital to go where a few other people dare? And thanks God, in that sense, we've had a much easier topic because we are meant to do that. We're meant to fish in cold waters. So IFC for over 50 years have been mandated to go theoretically where other peoples don't. We have also been taken over by bureaucracy like every large company, so we always also try to avoid risk. But we, in the end, in our charter, we're supposed to go there. And the beauty or the discipline of going there is to know what you're looking for, right? So I'm not looking for AI in Africa for the moment. But I would certainly be looking for almost any market in the world, any market in Africa, for the best hotel chain. I would certainly look for water and power solutions. I would certainly look for basic financial services. In that sense, there's always something there. It's just that you have to you have to put it in the proper timeline of history. If you really want to make money, if you really want to not be burned by being too early or being too late.
Thank you. Thank you, Andy. And you talked about sort of the opportunity and some of what IFC has seen on the success front and why IFC has invested with this mandate to go in the cold water. With other investors, we often hear a lot about risk, right? And that's the story that we're focused on, particularly when it comes to Africa. I'm curious to hear from both Chris and from Chi. When you're talking to potential investors in your company, or you're talking to potential LPs, how do you deal with this conversation about risk and ground it in something real versus perception?
So, I think you have to be very targeted in who you seek out as your investors. And this is sort of the general case for your type of company or startup, right? If you're fintech, then you should focus on fintech investors. If you're, fintech in Africa, then they have to be someone or a group that has that type of domain expertise. And we're even more interesting in that we are Web3 and even telco related. And so has to be this intellectual alignment. And then once you can kind of filter down to that level, that's where I think, this risk conversation of, why Africa versus the US, I think for us anyway, a lot of things that people have asked us is how applicable or replicable is what you're doing in other geographies, and can you take this same pattern and fact set and move that to other
say facts.
Facts, yeah, right. And I think that's one way to sort of mitigate sort of the Africa-specific risk, is to say, hey, look, we're building software, right? This software, if it can work here, it can actually work in a number of other places. If we're focused on a certain type of demographic of customer, and do that cost effectively, we can replicate that in other geographies globally. And I think someone mentioned, there are 50-something countries, right? So, and then if you can go from one country to another country or be Pan-African, that's a great sort of indicator of a broader expansion of what you're doing.
Yeah, I would agree with that. I'd want to underscore one part of what you said around really deciding who you have this conversation with and being selective about that, right? I always tell my founders, and myself, like life is about finding your audience. And if you want to have constructive, meaningful conversations, you need to make sure that you're talking to someone that you basically already kind of starting at the same baseline of understanding. Because typically when I have these conversations around risk, it's really centered around the opportunity, right? And then being very specific and targeted around what specific challenges or risks that we really need to take into account before we make an investment, right? And so I would say in the case of Africa, I mean, when you look at any opportunity or any investment, there is no reward without some level of risk, right? And there was a time historically where every region of the world was considered risky or scary, right? There was a time where the US, Europeans were scared to invest in the US, right? And JP Morgan literally had to go on a ship to convince Europeans and bring back gold bars to convince them to invest in the US. And JP Morgan was first in the market, and we see kind of where those returns have gone, right? They're still a market leader to this day. The same holds true for China. There was a time where China was considered very risky and unknown, right? And the investors that invested at that time are now reaping the rewards of that investment. Africa, the same holds true and has always held true for Africa, right? And I think that the investors that ask the right questions and invest now will reap the rewards.
Yeah, I love that. I love that example of JP Morgan and the US once being an emerging market, right? That Europe was scared to invest in. Andy, IFC's work is partially to crowd in more private sector investment so that you all are first there and maybe being the JP Morgans on the continent. Can you tell me a little bit more about that work and what you all are doing to build more connectivity to the Bank of Americas and others in the world who are coming in after you to support the growth of African fintech?
So the law of averages tells you that if you wait for others to come, you basically go to average returns, right? So you have to go first. So I'll probably repeat myself one more time to say that you have to go first. You have to know what you're doing, and be there. Now, your success by design does attract other capital, but the biggest falsity would be to wait for them. And the problem that I sometimes face, even as I said, even within my company, is that we sometimes don't want to go alone. But then if you try to unscramble that means you don't have your own convictions. That means you don't trust yourself. That means that you actually don't know what to look for. So, and that means that you are a willing average investor. It's fine. There's lots of that. It has to be. You need the bulk of that bell curve to be, the bulk of the money to be average investors. But if you really want the superior returns, you have to try harder. I probably will risk a soccer anecdote here if you mostly will understand what soccer is. I won't bet that that Nigeria will win the World Cup. I won't bet $50 to make 50. But if you tell me I bet $50 and I make 500 million, I'll write that check. For those odds, I'm willing to take it. And that's where risk has to be priced. And you have to price it in your mind, and the market has to price it properly, right? Because I could be shopping forever in Africa. If the market has priced it wrong, like it did in the last 3 years, we come empty-handed. But if you price the risk right, then there is no reason why anybody should come back empty-handed from any market.
I love that. One of the groups that has potentially an advantage in understanding and sharing that common language, that you spoke about, is the diaspora. So I'm curious about how you're working with the diaspora and what more can the diaspora do to really lay the groundwork and potentially have sort of an advantage on investing on the continent?
Mm-hmm. That's a great question. Well, I think that, and that's particularly why we decided to focus on this thesis. We live in a global society, and if you look at the way that we currently invest, it tends to not be as globally centered, right? We tend to think of investments and markets as singular countries, right? Where in actuality, you're not investing in a country, you're investing in the people in that country, right? And people are mobile, people are global, and there's an exchange that's constantly going on in the world. And so we want to be one of the thought leaders, and there are others in this space as well, that really want to shift the conversation to investing globally in people and being that bridge. And so we're investing in the 4 themes that I mentioned for that reason. So healthcare, care, climate action, commerce, and culture is a big one. When you think about, before any company does well or IPOs, they have to be culturally relevant in the cultural zeitgeist. And diaspora communities, or global communities, play a large role in that. Another thing too I would want to kind of mention, and it's an anecdote that I like sharing because not a lot of people know this. So we talked about how the continent, there's an opportunity to not just create unicorn companies there's an opportunity to create unicorn companies across the continent, but also within within each country, right? You don't have to expand across the continent as a company to do well. You can build a unicorn company within a singular country, right? Or even a singular sector within that country. But I like to share the story of Lyft. Does anyone here know how Lyft was created? So Lyft was actually, they predated Uber. A lot of people thought that Uber started the trend, but it was actually Lyft, right? And the founders, they were actually on vacation in Zimbabwe. And they were taking this thing called the Zim Ride. And they thought, and it was very well organized. There wasn't necessarily an app component, but it was just a shared vehicle system where you're able to get from point A to point B easily through having like a shared vehicle system. And so they thought to themselves, it'd be great to have this in the US, right? Went back to SF and created Lyft, modeled almost identically to Zimride, right? And so that's a really great example of how, well, in that case, they're Americans, right? They were traveling across the within the continent, and they were able to take a company that had a lot of cultural relevance, right, in that country, was doing well, and scale that. And there are a lot of examples of how that can be done, and there are a lot of examples of companies that are currently doing that within the continent, right? And so I'd love to kind of engage the diaspora to enable us to invest in each other, and create those exchanges. A lot of times when people talk about the diaspora, they talk about the brain drain and bringing people from the US back home. There's a lot of talent on the continent, right? And so it's less about having Africans of the diaspora come back. That's part of it, but it's also enabling and empowering the talent that exists on the continent and enabling us to build together collectively. We see a world in which African companies acquire US companies and vice versa. And it's very possible. When you look at the numbers, it's truly very possible, right? So that's what we're building for.
I love that. And clearly Mercy does as well. I could tell you're preaching to the choir here. So Chris, you ready to take on and buy some American companies? You don't have to answer that one, but one I would love to hear. We've started with a conversation that's very investor focused. You as an entrepreneur, I would love to hear a little bit more, kind of rooted in your experience about raising here in the U.S. and sort of what that experience was like, and what should we take away, for the folks on stage who are investors and the folks in the audience. What do you wish that the investors had known about the potential of your company and the potential on the continent as you went through that journey?
To be honest, I don't know that there's, what is it they say? Hindsight is 20/20. Raising money is a process, and in many cases, it's not a straightforward process. But I think what's really important at every stage of your venture in terms of what you need to communicate to investors is what are those progress points. I think the sort of term investors use is like traction, right? And looking at it and not necessarily unpacking it, you might think of this as revenues minus expenses equals profits, or something along those lines. But it can actually take on many different forms, and even if it's financial related, it could be different types of things at every stage of your company. And you think about it as like a science experiment where you're setting up, you're looking for the cure for cancer, so to speak, right? But you have to start somewhere, and you develop this hypothesis that you test, right? And that's what you go to market with your, as part of your traction. Like, hey, I completed this. These are the results, and it shows your hockey stick up and to the right. But you specifically design that experiment, and you might do a bunch of experiments before you get to the right one where you have that eureka moment. And I think, especially for the continent, it's really important to kind of think about it that way, especially if you're, again, we have sort of a unique business. It's web-based in many respects, so it's not in any specific country, but we work across many different countries within the sub-Saharan African region. But in order to get there, we had many different sort of steps that we had to go through, and each of those is what helped us, do our friends and family, our pre-seed, our seed, now our sort of Series A. So, and it's different, but it's the same process over and over again.
And I appreciate that, because often what we see from our founders, particularly coming from the continent, but also underserved founders here in the U.S., is that on the traction front, that they actually have to show more than what other founders might have to. I'm curious to hear from the investors on the stage. How do we level that playing field, right? Where we still want companies that are doing really important things, driving revenue. But how do we deal with this circumstance where we potentially have African companies being held to a higher or different standard than others? And how do you sort of deal with that in your circles as an investor?
Mm-hmm. Yeah, we see that in how the companies are being valued, right? So I'm invested in multiple companies. 70% of those companies within the portfolio are fintech companies. All three of the unicorns that I've invested in were fintechs, right? And if you look at, we invest at the seed stage, right? And if you look at their fundamentals at that stage, they were presenting as like a Series A or B, right? A lot of the companies on the continent are outperforming. If you just look at objectively at the numbers, they're profitable at the seed stage, right? The revenue numbers are incredible. Not just ARR, but like monthly reoccurring revenue, depending on the companies that you're looking at. And yet there's always sort of like this discount that's applied to the valuation of companies in emerging markets, particularly in Africa, right? If we're being honest. And while as an investor, that's what investors you'd want, right? The name of the game is to buy low, grow, sell high. But if we want to build an enabling environment and sustainable environment, we need to kind of start thinking critically about the right valuations. And that's one thing that we are not opposed to having those conversations with. I have actually coached founders. It's probably not to our advantage, but I think ultimately we're also in the business of building relationships, right? The larger the pie, the larger the market, the better for everyone, we all win. And so there are founders that I've told you should be actually raising more money. You're going to need at least 2 years of runway. You're going to need more money for this. And also you have the leverage. You can raise more money. And the valuation is actually a bit low and kind of help kind of coach them to get to the right size. Because ultimately, right, it also just, it's not only the right thing to do, and also it helps them really grow sustainably and hit those next milestones, right? And you'll see there are also cases where we've seen what happens when companies are overvalued, right? And they're raising at ridiculous valuations and that they can't reach, and they're not able to raise the next round, and everyone loses. So.
Yeah, that is a founder-friendly investor that you're telling folks to increase.
Yeah. I'm a former founder myself, so that's actually what inspired me to kind of go into this. I really wanted to be the VC that I needed when I was raising.
Oh, yeah. That's fantastic. That's exactly why we started a fund here at Halcyon as well. Curious from the IFC's perspective, how you...
I'll go the other way on that argument. It's part of the pricing that I spoke about, price of the pricing of risk. So yes, there's two ways to price risk: is you lower the valuation, or you raise the expectations of what you can buy with that valuation. So it's really the same equation. So if you really want to scare away investors in Africa, then go for the bubble. Just let's build a few bubbles once in a while, and then never see an investor come back in Africa again. So to me, the blessing is the bargain hunting. You eventually want to reach stable financial markets. You want to be able to be in an ecosystem where the entrepreneurs can find the same opportunities for fundraising, but they have to bring the same opportunity for upside. And in that sense, that's what markets correct forever. You don't want to correct a market for 3 years, for 2 years, for 5 years. You want to correct them forever. So you want to reach that equilibrium of supply and demand for capital, supply of opportunity and demand for capital that is sustainable, that is real, that is substantial. So we go the other way and we say, what will you do with valuation in the end, Mr. Entrepreneur? What does that give you to you now, except for the paper power and the ego and the chance for ego? You want to build a company. I want to build a company alongside somebody who remains humble all the way to the end. That valuation does not get under their skin, does not get in their blood. Yes, everybody has ego. I have ego. I fight ego all my life, and I want to fight it regularly, but we all have ego. So a valuation, a ticket does give you that. But look at the companies that were funded by Tiger. Look at the companies that were funded by SoftBank. They fed their ego to their throat, and they suffocated.
And I hear that balance, right, between getting to the right valuation for the traction that you've had and recognizing that value, but not letting it get to an extreme. We've seen a number of bubbles. I know we're close to the end of our time here. I could chat with you all day about the intricacies of this complicated environment, but want to leave the audience with 10 years from now, what is the headline we're going to see about fintech in Africa? What are we going to, what's that story that's being written right now, but that we'll see in 10 years? And if we could just go down the line as we conclude the panel.
I think what you're going to see is there's essentially this foundation that's been laid, and what we're doing today, what successful firms like Flutterwave have done and will continue to do, and their cohort, it's laying an infrastructure, right, that can allow the nth company startup to scale exponentially in a way that's not historically been possible, but in across the continent in the ways that you see in the West, right? You should, and that's the one way to address a lot of these valuation concerns or opportunities is to say, hey, look, I as a startup founder can tap into this network that gets me into 100 million users, whether it's, leveraging the mobile carrier network or the card networks or the banking systems or satellite. These are some of the new opportunities that I think we have to think about in order to fully realize the potential of our ventures.
Yeah, if you think about like what the current environment is, or where the opportunities lie within fintech, just, I mean, right now they're like the current headlines. I don't know what the headline would be, but I do think like when you just think through some of like the numbers, they're like kind of headlines in and of themselves. Like 70% of all mobile payments in the world are made through Africa, right, and by Africans. And I think that like it would be something along the lines of, in many ways, the way that we move money it's inherently broken. Like fiat currency, everything is pegged to the USD and to the euro. Like that automatically is a losing race for most of the world, right? When you look at like the geopolitical situation, like, I mean, a lot of people would agree it's kind of, everything is kind of rigged. So maybe the headline would be, I think once we sort of have more people building for the world, right? We have more founders building for the continent and the world, and the global south is really able to participate in meaningful ways in seizing a lot of the opportunities that exist or fixing a lot of the problems that exist. I think I would hope the headline is just very simple, right? We've fixed the critical problems, and it's essentially just like, I was able to send money back home today quickly, on time, and without paying an egregious fee attached to it. Like, so I'd hope we'd reach a point where it's pretty mundane, right? And we're all kind of operating on a relatively level and mutually profitable playing field for all of us.
The main development models that we've seen in the history of mankind, given that we actually operate a very, very complex system as a human society, is from simple to complex, which means simple, for example, in the context of fintech, simple banking is the current topic that we discuss in Africa. So once we get that down, in the markets that we get that down, we move on to more complex financial systems. We move into capital markets, we move into sophisticated financial instruments. So that it will be the discussion that we will discuss for Nigeria. But then the other model of development is from center to periphery. So then as the larger markets, the main markets, main cities get solved for that, then we have to go down to the Malawis, the Benins, the Togos, and we will see the same scenarios play 10 years down the road there that we are seeing what we're seeing in Nigeria, in Kenya, in Egypt, or South Africa for the moment.
Well, thank you all. I really appreciated the conversation. I'll leave with my own headline that I'm going to take from you. It's African fintech takes over the U.S. That's what we're going to see in the next 10 years. All right, thank you all.